recording. And Andy, how you doing? Michael, what's going on?
Hey, thanks, Scott. Appreciate it. Doing pretty good. Hey, Michael, how are you?
Hey, how's it going? Going good. I'm
All
surviving
right.
in this market.
Yeah, I tell you, we got some things to talk about when it comes to market recap. And I want to thank Michael, especially for coming and helping me out today, since Steve is out, and I'm totally got the crud and under the weather, but kind of like that last Thursday, guys. But we'll fight through it, and hopefully we'll provide some content that will help you profit in the marketplace. I'm sure Michael will share some good ideas. Hi, friend. Hello, David. All right, let's get started. This is the Trade of the Week webinar. Okay, before we get started, let's go over the disclaimer here. Guys, remember this is for educational purposes only. All right, we're going to be talking about some setups and overall market action and maybe some ideas, but nothing should be construed as investment advice. That is not what we're doing here. If you are seeking investment advice, you might want to look for somebody who has the required license for that, whether it's a stockbroker or somebody that can act in that capacity. All right, I'm gonna see if I can follow along with Steve's slides here. They're a little bit different than mine. You're not alone when it comes to trade ideas, and that is definitely true. We understand it's a powerful software, but at the same time, it's very intuitive, and it's our job, all the traders here, to help you uh, get familiar with, to help to train you, to educate you, to teach you how to use the different configurations and create different windows that's going to help you to profit in the marketplace. We start in the trader's room. I'm sure most of you have been in there. That's Barry's room. He's a great trader. He was doing some short selling today, if you were in there, from what I hear. Using his backhand, we like to say, when you're in these bull markets for so long, you're using the forehand all the time and going long, I should say. But when the conditions turn on you, it's always nice to have that backhand. In other words, be able to short. So you guys can learn a lot from them in there. And not only that, after a couple of hours, Barry's really good about helping people with the software. As a matter of fact, he encourages it. So ask him questions when you're in there. He likes to help out. Every afternoon at 5 Eastern time, Monday through Thursday, we do have an afternoon webinar. It's usually a combination of myself, Steve Gomez, or Jamie Hodge, kind of juggling those responsibilities. But on Wednesday, we do throw our CEO, Dan Merkin, at you, along with our CTO, Brad Williams. Great place to come to find new versions that are coming around the corner with bells and whistles on them. Also a great Q&A. If you have any questions, it's a great Q&A webinar as well. And daily support sessions, guys. This is new. This was we used to have TI University. That's still available for everybody. It's on our YouTube channel, but we have just figured out that most people were going to the YouTube channel and watching it anyway. So you do have access to that. And what we've done now, this is kind of Michael's idea. We opened up a YouTube live stream. Okay, this is every day, Monday through Friday at noon Eastern. And it's come one, come all. It's a Q&A forum. Of course, we'll talk a little bit about the bells and whistles while we're waiting on questions, but it's a great hangout. This is kind of replacing our TI University Q&A part of it. So in other words, you can watch all these videos on YouTube, and then you can come to these support sessions and learn a lot more. Ask the questions that you may have that came to you while you were watching the videos, or while you're playing around with the software or whatever. All right, and here it is. I should have pulled this up. I forgot. Scott and Rudy made a really nice slide for it. This is our daily support sessions, weekdays at 12 Eastern time. And you can see where you connect down there, trade-ideas.com/live. Okay, so remember that. Get in there at noon Eastern, Monday through Friday. Steve, the slide here that he stole from Brian Shannon, man and machine combined. Okay. This is Paul Tudor Jones said, no man is better than a machine, and no machine is better than a man with a machine. All right, and there's a lot of truth to that. Okay, we like to think Holly, or I shouldn't say Holly, the software is the machine, and of course you are the man, the human, the woman, whoever it may be, interacting with the machine to basically give you advantage in the marketplace over those who are not using something as powerful as trade ideas. All right, let's take a look at the agenda for today, and I kind of threw this quickly together, guys. I'm going to spend some time on market recap, okay? Because I threw in there Armageddon. Obviously, I don't think it's Armageddon, but things get kind of ugly. People freak out, get scared, and they think this is it. We've seen the top. We're crashing 45%. And we've seen this before, guys. Nobody knows what's going to happen, but it's nice to be prepared. And so we're going to go through take a look today at the overall market and try to determine if it's different this time around. Pick out some levels of interest, some key support level that we think should probably hold if you are bullish. Anyway, it's good to be prepared when these levels hit, because you might want to start nibbling. You might want to start nibbling on some longs if you're not already starting that. Okay, we're going to talk a little bit about the AI recap. Nothing like it was yesterday. Okay, yesterday was a really good day in a volatile market. Today was so-so. And then TOW, there's really not a lot to talk about because Steve and I got together and we discussed it, and looking at some charts and looking at the market and the vicarious position it was in, and we both agreed it's probably a good time to call cash, and it ended up being a great call instead of trying to pick something and getting everybody run over. And then Michael's going to step in here, and he's going to maybe talk about the 3 different Hollies. We get a lot of questions on that, or he may want to venture off into something else. I'll leave that up to him. But let's back out of this and let's pull up the good old market recap. Make a big old chart here of the SPY so we can get a good look at it. We'll even go a little bit bigger. Wow, that how far do you go? You have to go back to see a red bar that long. That is one long bar today. And look at the volume. This volume has eclipsed all volume in the last, I'd venture to say last year, and close to it. Yep, nope, that's going back to December of 2018. Yeah, so this is the biggest volume we've seen in the last year on this big red bar. Now, some people will call that, this is panic. Everybody's getting out of the market. Others, bullish, got people maybe come in and say, it's capitulation. It's kind of like we're seeing over here. Maybe we get another day like this. It may be time to buy. Everybody obviously has different opinions. I will say this, obviously the last 2 days, it only took a couple of days and this market is broken, okay? We're just well below our 50-day moving average. Maybe we can come in here. Let's draw some lines to see where we are currently right now. Just go ahead and marry it up at the closing price today and see where it marries up to. And you can obviously say, hey, there's some possible support here, right? We had resistance at one time, got through it, back down and back through it again, came back down, retested. So there's obviously a couple of nice little points here that we could draw a line through and call this possible resistance, kind of where we bounced at today. Through that, honestly, guys, when you get this kind of momentum, I mentioned it even yesterday. I think I can't remember one of the other traders that I'm eyeballing this 200-day moving average. As a matter of fact, I have been mentioning for a few months now. Typically, guys, what you see when you have a major breakout, if I draw this line down here, okay, and I back the spiders out, this was kind of a major kind of break right there off a double top and through. I just wanted to go back and make sure there was no other areas there, and it wasn't. So we had a nice little double top here, tried several times to get through it, major breakout, and it's been a nice run since then. Well, more times than not, when you have this kind of breakout, at some point or another, you have a retest. In other words, a retest back of this breakout area. Now, it's taken a long time. Looks like it may take 6-7 months, but I would not be surprised to come see us retest this level. Whether it's going to happen tomorrow, maybe next week, I don't know, or it obviously may not happen. That's still a pretty precipitous drop to come all the way down here, but would not shock me. So I think you got to put levels like that in your mind, and when you're looking to maybe go back into the market, you always got to look from whence we came. Okay, so if I look at this right here and look at today, and it's like, oh my gosh, that is catastrophic. That is just horrible. Now let's put it on a weekly chart. Okay, it looks still kind of ugly, but nothing. I mean, look at like that. I mean, that is really just a blip on the radar when you look at where we have been over the last several years. Okay, so sometimes you got to kind of broaden your view of everything and get a look. And interesting, Michael, check just out. Look where that 50-day moving average is on the weekly, right at that prior breakout.
And I think that's really, really important to note that a lot of people, especially day traders, and I think us day traders and short-term swing traders are the worst on this, where we're so narrow in focused on what's happening right now. We see like a 3% down day today, and then a big down day yesterday, and we're like, oh my God, this is crazy. So I'm actually glad you did that for my trading, Andy. Just had that zoom out look. It really doesn't, in the grand scheme of things, we could pull back to that 300 area. Build a base in there and push higher, and then it's just another higher low when you're looking back at it.
Exactly, Michael, and I didn't have it planned today, but yes, I'm glad I did as well, and that's a very good point. A lot of traders that use trade ideas and are probably in here today, even though you might not be day traders, you may be like me and Michael, who are very short-term swing traders. Sometimes you get caught up in the intraday and in the short-term daily when you take a broader step back and take a bird's eye view. It's like, wow, this, I mean, probably one could argue, man, we could come down here to the 200. That would be an ugly fall, but hey, in the grand scheme of things, yeah, a move down here to our recent breakout would not surprise me at all with the momentum that we have.
Yeah, that's just a retest looking back. Same with that 200-day moving average. When you scrolled out there, that would still just be another higher low in the grand scheme.
Yeah, good point. What Michael's saying here, we have the 200 period moving average down here. If for some reason things got real ugly, okay, Kobe just went crazy, and we do come down here, and Michael's makes a very good point. If we come all the way down here to this 262, 263 level and bounce off this, in the grand scheme of things, it's still a nice upward trend. It's just when your money's in the marketplace and on a short-term level, and you're watching, every little tick, and even looking at a daily chart. Let's get back on the daily. Things can really look a lot more ominous than what they may be in the grand scheme. So, anyway, yeah, a date down here to this 300, like Michael and I have been saying, would not surprise me a bit. And a lot of times, when you have the 200-day moving average, it usually doesn't bounce right at it. There's usually a wick to shake the trees a little more. So I think that's a level to keep an eye out. Be careful. I know Steve was mentioning today he's kind of hoping for a short-term bounce, so maybe he can short again and short in the pocket. In other words, maybe we get a bounce up here to the 50, and then he's short again. But keep in the back of mind, guys, I mean, even though, we can go back over here, and even though we haven't seen too many bars like the ones we've seen today, we've seen some ugly action back over here in December 2018. So you can't have, head snapping rallies. And let's face it, over the last 11 years, anybody who's tried to get short and hang on for the long haul, they've been run over. So time will tell, but I definitely feel like it's a time to be cautious for sure. and the market will always be here. Don't feel like you have to be too early. If you are looking to pick stuff up and scale in. Okay, please, if you're looking for longer term holds, nibble 25% of the time, a third at a time. Just little nibbles. Most today commissions are free anyway, so just take little bite-sized pieces. Well, Michael, do you have anything else that you want to interject into? We'll take a look at the cues real quick. Pretty much the same picture over there. Into the overall market recap, or?
No, I think you covered most of it. It was funny to see. The only thing, and this is just kind of my statistic nerd brain talking, but I spend a lot of time taking a look at the correlations of different industries and different stocks, and what we've noticed throughout the year is that in periods like this, correlations get pretty close to 1, which just means, right, everything kind of moves together. And that's kind of what we noticed here as well. There's not really a lot of outliers bucking the trend, which is something I'm going to talk about in a bit. But it's just important to know that people are always looking for where's kind of the safe haven or whatever. And you can have stocks that are certainly over performing better than what's out there, but quite quickly, if you look at the correlations between all the different industries when these things happen, they get pretty close to 1. So just kind of a word of warning that if you're looking for the thing that's going to go reverse, it's better to do that when the market is calmly selling as opposed to kind of dramatically selling.
Good point. Yeah, that's a very good point. But yeah, bottom line, if I have to circle back around on these SPYs, is it can get scary. Michael and I have both traded a couple of bear markets, so we know what it's like. There's a time to pull back, and even if you're not comfortable with it, it can be very intimidating. In other words, especially when you get accustomed to buying pullbacks, and then all of a sudden the stuff's not working and you're getting run over. Hey, just back away. You don't have to trade. Once again, the market will always be here. And do not feel, wait for your opportunity. Sometimes capital preservation can be the best trade is a non-trade.
Yeah, and even if you are betting short and betting correctly, it's just important to note, like Andy was showing you the size there of the SPY candles. They're a move that would have taken a week or two before on your stock can now happen in an hour. So the best and the most prudent thing to do as a trader then, or as an investor even, is just to say, okay, I understand that things are moving much quicker, and this seems obvious, but I always feel the need to hammer it home when I see these, is that even though things are crazier, it doesn't mean that you really have to be totally afraid. But what you have to do is lower your size, right? You can't, if a move that would take a week before is now taking an hour, you would be incredibly dangerous just to sit there and say, okay, well, I'm just going to continue to hammer away at the stocks that are doing well, or whatever my trading style is, and do it at the same size, because you're going to be stopped out much quicker, you're going to be right much quicker. So it makes sense that you just widen your stops, and by widening your stops, right, it means you lower your size. So again, keep that constant, I'm going to risk X amount per trade going, but just understand that your trades are going to resolve quicker. So like Andy was saying, me and him are mainly kind of short-term swing traders. So we want to buy something for a week, maybe 2, and then be out. So we're just understanding that those things are going to happen quicker now. So now, even yesterday, the day before, I had a couple swing trades that just ended up being day trades because, again, everything is just quicker. So it's just important to kind of change your mind frame to adapt to that.
All right. So real quickly on Holly, guys, I'm not going to go over each one. You can see the my channel bar here, and Holly, there wasn't a whole lot of trades today. Looked like 14 trades at all. Looks like the original Holly, the old Holly Grail we call her, which is now Holly AI. It was up 1.78, but with the losses in 2.0 and Neo. It looks like it was about a wash, a little bit probably more to the downside using these parameters over here. So I am not going to spend a lot of time on Holly today. Holly, as a matter of fact, I think I tweeted it. I was really impressed with Holly's performance yesterday in an ugly market. Every one of them finished green, and there's some really good trades in there and some nice percentage wins. But today, not the case. But that's okay. This kind of market can be a tough market for anybody. There's an old saying that bear markets wipe out both bulls and bears, and there's a reason for that. Yeah, because shorting's tough, and some of the best bull runs become in bear markets because you get these incredible up moves in the bounces, and what happens is it rips the bears, and then the bulls get trapped. But well, all right, Michael, if you don't mind, I'll just pass it over to you, and you can share some insight on your content for today.
Yeah, sure. Just make sure you're feeling better there, Andy.
Oh, thank you. You know what? I'm surprised. I threw a cough drop in, and I was able to muscle through it. All right.
And there. So if I did that right, you guys should be seeing my screen there. I hope I did.
You got it.
So first, I guess I'll introduce myself because I'm not on these too much. There may be there who don't know me because I'm just not out in front of it as much as these guys are. But my name's 2006, I believe, is my first account. I've been using them ever since in different trading styles. Back then I was a prop trader, and from then I've kind of adapted as the market has. So mostly algorithmic, statistically minded trader, in that respects now. But back in the day, I used the system just to look for big bids and offers back when that was kind of a game that you could play and you could play well. So just to kind of show how the software changes over time, and how the software adapts as the market adapts, which is one thing that I really like about Trade Ideas. They don't just kind of sit on their morals; they continue to change. But I am basically responsible for a lot of the artificial intelligence type stuff, not from the programming end of things, because I don't know how to program. That's something that's on my list to learn next, but more because I am soon to be a CMT, but I've been focusing on kind of the statistical analysis and the back testing side of the market for many years. So something that was a great fit with Trade Ideas when I popped over here was the fact that they already had these programming tools in place, and they just needed a trader for, lack of a better word, to help teach the AI. So that's a lot of what I do. So we're going to talk a bit about the AI today. And first, I'm going to start by teasing something. And again, I'm not on kind of a schedule like these guys are, so feel free just to pop in the chat and ask questions as I go. And the first one, has Holly seen price action like this before? And yes, it has. Holly's been around for almost 4 years now. So all of these, volatile down moves and down spikes that we've seen out through here,
Michael, did you accidentally hit your mute?
the day trading time frame can do a really, really good job of helping everything out there. So first thing that some of you guys may notice is that I've got an AI window here that looks kind of dramatically different than what Andy just showed. And that's because this is something new that I'm working on that I can't talk too much about, but I thought I'd do a little tease just because I'm used to watching these webinars with Brad and Dan, and they get to show all the new tools. This is an AI 2.0. So I'm going to talk a little bit about that, and then I'm actually going to explain the current difference of the AI, and then something that we're going to take a look at when we change things around. So this AI in particular is focusing on stocks under 20. So that's something that has been requested a lot, is a lot of people like to play these lower price stocks. So I've been working here in the background and testing. Today you can see it performed phenomenally off 17 trades with $100 risk. There's still some work to be done. It took a little bit more risk, I think, than I would like, but those are things that we'll just kind of tweak over time. So anyway, just a little tease there. Now let me change my settings and I'll go over a common question we get, which is what is the difference between the three AIs and why do we have three of them? And will there be more? So I just have to change something real quick to get me out of my playground into the real world here. And let's just start with the different segments of the AI. So for anyone who is new, essentially, and is trying to figure out kind of what is the AI and what is the AI doing, and again, why is there three of them, and what's the different that's kind of happening there? Just going to make sure I have the questions tab out there. So first of all, there's Holy Grail, and this is if you're seeing any of our reporting of past performance. Again, we've had this running for about 4 years. This is the AI that we're talking about, and this is kind of the tried, tested, and true. This is the one that makes the most. It's existed for, I guess, the longest period of time is the best way to put it. So this is what we report, just because, again, this is the one that kind of has been working for the longest. But when we were building this, we were learning at the same time that the AI was learning. So the AI takes each piece of data, each new day is just a chunk of data for it, and it adds that piece of data to the last segment that it has. And it just kind of keeps building and learning and growing, and it's pulling in different strategies based off what it thinks is going to work best in this individual market. And that kind of changes day by day. Again, right, if you look at the SPY today versus a couple days ago, we're obviously in a different environment. So the strategies you're going to see here tomorrow are going to be different as well. But at the same time that this AI is learning, we're learning as well. And we're saying, okay, well, I don't want to mess with this thing that's working really well. But I want to start playing, right? I want to start seeing what's next. I want to start, having a kind of a playground, I guess, for more or less of my thoughts. And that's the first one that we built was kind of Holly 2.0. And what Holly 2.0 was, it took the same algorithms that you guys all kind of know and love, and it applied a little bit more of a risky spin to them, where it said, okay, I'm willing to take more of a risk on each trade just because there are a lot of our clients out there and a lot of traders in general that are okay with being higher on a risk profile in hopes that over the long period of time, you get to smooth out the returns, right? There's people who want to have a risk profile that just kind of looks kind of like this and maybe barely beat the market. And there's clients who are okay with something a little bit more like this. But at the end of the day, hopefully, if they've got their trading plan intact and everything, they end up a little bit higher. So that's kind of what we were thinking with 2.0, where it had all of the same strategies you knew, just turned up kind of the way that the back end manages risk, which at the time was super cool. And then we did the same thing with Neo, and Neo kind of came along when I did, and they said, listen, Michael, here's your playground. Go ahead, come up with any kind of crazy idea you can think of and put that in there. So probably in October, I think, of last year, I was able to kind of completely redesign Neo from just another risk profile of the AI to kind of something completely different. So how I mentioned that the current AI has, this bank of tons and tons of strategies, and it pulls out what it thinks is best for you at any given time. What Neo does now is it skips that kind of individual step. It skips that step of, I'm going to go through 70 strategies and pick which ones are best. If you've been watching Neo for any length of time, there are 4 strategies that exist in Neo every day. So what it's doing is it's optimizing, but not doing a selection of strategies. It was kind of a reimagining of the AI as a whole. And the theory behind it was to basically only look at the highest volume stock. So today is not the best example, but it's a trader like any other. So some days it does well and some days it does not. But if you go into, let me go into just the Neo trades and show you something here that, so ARLO has, if you look right down here, 5.28 relative volume. So that's essentially like 530% normal volume. So doing 5 times as much as it normally does. Sale has about 7% normal volume, and CMRX is about 6 times normal volume. So big numbers when it comes to just what you would compare stocks to. And that's kind of the theory of this AI from the ground up, is to say what's important is that you focus on, especially as day traders and especially as active day traders, that you focus on where the volume is. It's very easy to get kind of lost in the minutia of buying a stock in the middle of its range, maybe because you like the daily chart or the news story, but there's really nothing happening in that moment, in that very specific moment in where you're going to have edge. So the reason we kind of shied away from some of these strategies before is because we didn't have the ability to automatically trade these. So when we built strategies that were fast moving like this, we had client feedback of, I wasn't able to catch this trade or what have you. But now we have the ability with Brokerage Plus that you can either just click on it and trade it right away, right? You can just click and say, I want to trade this in conservative mode, go. So from seeing the alert to being able to trade it with a risk management plan in place, so having your stop loss out, your closing order for the end of the day, all of that, that's now kind of happened. It's gone from maybe 5 or 10 seconds, depending how quickly you were on the keys, to now you can do it in like a second or two. So that was the first big leap. And then if you are trading with our Brokerage Plus add-on, you could have the system take these for you automatically, which is more like how I trade, where I sit down every day, I already have my watch list in place, plus I have this Neo AI running, and I just manage the trades as they come into my blotter. In that way, I know that if I miss something, because of course it's still possible to miss trades, I was still as fast as I could be. If the robot missed it, then I would have missed it too. But in many cases, the robot gets it in a time that I would have missed it. So that's kind of our progression of thinking, and the way we learned is we learned what to focus on. And then we're trying to differentiate these artificial intelligent engines for different clients. So if you're someone who likes to trade gaps and very high, fast moving trades, then something like this will be great for you. If you're, for example, not so much about that, and you want to do something that's been tested for a longer period of time, that it gives more trades, and maybe, I clicked all, and maybe you're looking for something that moves a little bit slower, because you like to know a little bit more about it yourself, then you have Grail. So as we continue to differentiate those, I already showed you what's in the work next, which may or may not be the new 2.0, is this under 20 AI. And then what's coming way down the pipe is more of a swing trading AI. So that's kind of my pet project. That's why I'm locked in the cave for as long as I am. We're really trying to expand this out. Once we've got something that has done as well as it has and has beaten the market as consistently as it has, now it's where we get to kind of expand out from there. So again, if you're not a subscriber and you're interested in it, well, this is a good time to get on, because we've got this growth plan, And they've got me there now, I guess, where my primary focus is just watching all of these trades come through and reading any academic paper I can find about different trading methods and trying to incorporate that as well. We have a whole new change to our risk management that's planned for this year, again, as well as the under 20 and the swing trading AI. So a lot of cool things planned. And again, I'm here for questions. So anytime you want to ask questions, go right ahead. But the kind of last thing I wanted to hit on is my individual plan for this market. And although I'm a quantitative trader and I focus a lot on that area of the market, I do that always from the perspective of psychology. I believe that if there was a 100% mathematical equation that could just beat the market entirely, that already would have been done. And I think where we're getting at is kind of the closest that human beings can be right now, where we give you amazing ideas every single day that you can either have put into your blotter for you and you can manage, or you can decide which ones to take, and then it's just up to you to then take them. But there's a certain things that only human beings can do right now, which is why Andy in the beginning put up that slide of a man and a machine versus just a man or just a machine. And so what I like to take a look at now is what I think may happen in this market, and then where would I study from a quantitative point of view to take advantage of that. So I do have a question here, and I'll get to that in a bit. Maybe I'll continue my rant here, and then I'll leave a little bit open for questions. So when I'm looking at this market from a trader's point of view, I see that, obviously this market's down a lot. It has certainly the potential to continue lower. It's the first kind of shakeout we had in a while. But what if we are to see a reversal? What's going to happen? So then I start to think, I say, okay, if I am a trader, or if I am a portfolio manager, a hedge fund manager, or something like this, my focus was going to be on kind of taking that profit of when it would, the moments that I think if things are going to turn, what am I going to take off the table? And it makes the most sense to take off the table. So mathematically, it always makes the least sense to take off your winners. You should always take off the stocks that are not working first. But we know from, again, a lot of studies on human psychology and behavioral finance that most people do it the other way around. If they have two positions in their blotter and one's up a bunch of money and one's down a bunch of money, they sell 90% of the time the one that's up a bunch of money, hoping that the one that's down a bunch of money will come back, and then they'll take that one off, right? Mathematically and statistically, it's the wrong thing to do. So, but anyway, going through this type of thought process and this thought experiment that I go through every night when I look at the market, and I say, okay, what is the world thinking? My theory was, okay, if they're going to take off what is the thing that is the most profitable for them, then it makes sense to look at the thing that is A, down a lot, but B, has a reason, and I know there's a lot of people in it, right? So I can take a look at this squeeze me, which I see that there are some requests for, so I will save and share this and give this to you guys like that. There you go. I think that went. Did that go? Oh, send to all. Where what this is a top list where the stocks in it need to have pretty high short floats. So, for example, this one, this STMP, has a short float of 25%. So there's a large amount of people that are in this short. But if you were somebody who was short this stock during the last 2 or 3 days when the market was really falling apart, you could have made some good money from up here to all the way down here. So I'm looking at this particular list and I'm saying, okay, how do I know people are betting against it? Well, that's fairly easy with the short float. And then how do I know those people are going to be up money? And it's going to be stocks that have moved pretty dramatically, maybe even on a percentage basis, much more than the market has. Now, the other way to look at it, and this is something that I'm also thinking about, and this is, again, the beauty of the market is there's always two sides, is you could say, no, Mike, the ones that they're going to take the profits on are the ones that are going to be up the most, because if they're long that stock, they're going to sell on the ones that are up the most. So if you have that kind of thinking, you can just reverse that and say, I want to find stocks that have closed kind of near their highs for the day, but still with this short float. So the ones that are relatively strong to the market. And that's kind of what I think the beauty of this software is. You can develop your own synopsis of things and kind of work from there. So it's, again, this is the way that I look at the market as kind of a quantitative trader, where I want to say, what are both sides of the market thinking and where should I put my focus on? Because I don't believe that, there's so much information out there and there's so much information within trade ideas that it can be very, very easy to say, I'm going to scan everything. And then it's like, okay, well then why do you buy a scanning platform? What I like to do when big events like this occur is just sit back and think, and then construct a scan that will, the best way express what it is that I'm going to look for next, which again, in this situation is stocks that short sellers would have made a bunch of money on in the last few days. But they have these huge short float percentages. So if these short sellers start to cover to take these profits off the table, I think it's potential that they're going to go to these heavily shorted names first. And we all know what happens when a stock with a massive short float starts reversing quickly, right? You get these kind of margin call run throughs, and things popping dramatically. So what I'm going to do now for the end is I'm going to go through some of these questions here until I run out, or until Scott gives me the hook, one of the two. Let me connect to the simulator here. And the first question was about risk management within Brokerage Plus. Stop loss target, trailing stop loss, and then you can choose a formula. If you can explain that a bit, I don't. So the formula of, let me do this here. So when you're in and you're editing your strategies, here's the question about when the gentleman or the lady, I guess, in the risk management tab, you can see that there's a filter option. So what does this mean if you want to put a filter as your stop loss risk management? You can essentially do that with any filter that we have, but what it's going to do is it's always going to equate to a basic number away from price. So for example, I have above low here as a stop. And let's actually find a better example to look at for this. What closed a little bit off its lows? I know it's going to be hard. Apple closed very slightly off its lows here. So Apple closed at, my eyes are getting old. 298.08, and the low was 286.13. So if we right click here and go to edit, you can see, say for example, again, I can't, my eyes are old. So say this is 50 cents, for example, the difference between where the stock is now and the low of the day. That will equate to, say, 50 cents. So that means that this filter value within trade ideas is going to be 50 cents, right? That's what the output of this equation is, which again, which is just kind of this mathematical formula that we came up that fluctuates with how volatile and how much volume is going through this stock. So here we have smart stops. So you can put that in and then it will always, again, that will come up with a number, and then that number will be what your stop loss is. So again, smart stop, the minimum a smart stop can be is 25 cents and the maximum can be 75. So if you put this in, you know that your stop is going to be somewhere between 25 and 75 cents, and it will fluctuate based off whatever you are looking at. Someone asked for the squeeze. I put that in chat. Hopefully that worked. If not, just email in at info@trade-ideas.com and you can find it there. Also, I guess if you guys are interested in the squeeze filter, another thing to note is that we have a whole squeeze channel, and that's actually where I took this from. This is Steve Gomez's scan. That's the price alert thing, Michael. That's not the channel bar. There's a channel bar. So yeah, so we have here a whole, I think it's just called squeeze, and it's got a guy like squeezing a watermelon or something. And that is our short squeeze channel. So it's got a lot of different, where is that? It's in there somewhere. It's a guy squeezing fruit, I promise. Is Holly only using price action, or does she look like things like the inverted yield curve? She wouldn't look at something like the inverted yield curve because that's a very long-term fundamental thing that isn't conducive to short-term trading at all. However, it does look at more than just price action. It looks at price action, short float, social media indicators. It has some fundamental indicators like earnings or news events, things like this. But since everything we're doing right now is short-term in nature, everything that Holly looks at will be kind of short-term in nature like that. So instead, and things like that kind of make a little bit more sense, in which you're, in which you're kind of bouncing back and forth between different things, but different things that are more short-term in nature and don't take so long to develop. So that is, I believe, all the questions. If I missed one, let me know.
No, you got it, Michael. And I wanted to
Sorry,
tell,
go ahead,
I did drop that Squeeze Me cloud link into the chat window. So in case if you guys didn't catch
great,
it, yeah. And also I dropped the simulated as a paper trader video in there where we discuss the different types of, I think Steve covers the conservative and moderate for, who was that? Jose asked that question. So you grab that video. It's also in the chat panel. Mm-hmm.
Great.
All right.
Great.
Well, do you have anything else, Michael, or no?
No, and unless anyone has any more questions, I think I'm done.
Okay.
I'm done ranting for the evening.
All right. Well, great. Thank you. You guys do this every week. Yes, Andre, we do this every day, Monday through Thursday at 5 Eastern time. So be sure you sign up for our webinars, and you'll get an invite to each one. So.
Well, and also those afternoon sessions too, Andy, on youtube.com/tradeIdeas/live.
Yes.
Every day from 9 to 1 Eastern.
Yep. Good point. All right. Thanks, Michael. I appreciate it. And what we're going to do now, guys, is bring Scott in. Scott's going to walk us out, and you guys hang on, and he'll have a discount code for you. Thank you, David.
Thanks, guys. Yeah, remember we do have a new ebook that just came out, written by our CIO, Dave Mabe. If you could back up to the previous slide there. It covers what to do with earnings season and includes some great strategies for you. There we go, for you to try out. Just go to trade-ideas.com/earnings. And again, it's written by Dave Mabe, the creator of Brokerage Plus and our AI. You can learn what he does to deal with earnings season, take advantage of some scenarios. He's got some cloud links in there too for you to add to your layout. Got a podcast. We just released a new one last Friday. Should have one up this Friday too. So just search for Trade Ideas Podcast to make sure you have us in your app. That way you get the download immediately as soon as it comes out. We have a discount code, 15% off the first month or year of a new subscription or upgrade. New TOW is the code. It's case sensitive, so it's all caps. Just go ahead and plug that in when you're either upgrading or subscribing and save on your first installment. If you have questions, the best place to send them is info@trade-ideas.com. You can follow Michael Noss on Twitter. It's not on the slide, but at Bonpara, Bonpara. Also check out Today Trader, that's Steve Gomez, and at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook page to like and share what we post with your friends. Thanks, everyone. The recording will be up later on tonight or tomorrow morning, so stay tuned for an email between now and tomorrow morning with a link to the replay of the video. Thanks, everyone. Thanks, Michael, and thank you, Andy.